Hello and welcome to the Look Ahead for Wednesday, the 4th of September with me, Fiona Cincotta, Senior Market Analyst at City Index. So we've got a pretty busy economic calendar tomorrow. Overnight, we've got Australian GDP data as well as China's services, cakes and PMI figures. In the European session, we've got Eurozone services PMI, the composite PMI, as well as PPI data. UK services and composite PMI figures as well. In the US session, we've got JOLTS job openings and factory orders, as well as the Bank of Canada interest rate decision. So just kicking off with what we're expecting from the Bank of Canada. They're expected to cut interest rates by a further 25 basis points. That would mark the third straight meeting where interest rates have been slashed. That takes the rate down to 4.25%. Now, given that the market is expecting a further 2 interest rates after this one across the rest of the year, it does look like it might be quite difficult for a dovish surprise from the central bank. I think if there's anything, there's a risk that we might find the Bank of Canada a little bit more hawkish than what the market is pricing in. So let's just take a look at what this all means for the USD CAD. Remember, we've also got JOLTS job openings and also US factory orders. So quite a bit of data coming out. The market, as we know, is watching US data quite closely as well ahead of the US non-farm payroll decision on Friday for clues over whether a recession is looking likely in the US or not. So here we can see there's been a really steep sell-off in the USD CAD from the peak of around 139 that we saw back at the beginning of August. We've seen a really sharp fall in the pair, dropping to a low here of 134.40, taking out that rising trend line support and also the 200 SMA. So given such a steep fall, it's not surprising that we're having a little bit of a rebound here. I think this is going to be a level to watch out for on the upside. That's 136. It's the 200 SMA. It's also a level which has offered support on sort of multiple occasions across June and July. Buyers are going to need to get a break above there in order to extend gains towards that sort of 137 level for the 50 SMA and on towards that rising trend line. But I think there is a potential here that we could see a fall again lower on the downside, 134.50. That's going to be levels that the sellers are going to need to take out to extend the downward bearish trend. So other things to be watching out for, as I said, we've got Australian GDP data now. It's worth having a look here at what's going on because we've seen this very steep sell-off in the Aussie as risk sentiment has soured quite dramatically today after we saw that US manufacturing data come in weaker than expected. It contracted for a 5th straight month. New orders were at the slowest pace in 15 months. So this data is just feeding into that recession narrative, which unnerved the markets at the beginning of August. So that's part of what we're seeing there. And then we've also got the actual sell-off in the Aussie because of data. So we saw the current account deteriorated for Australia, and that's a reflection of the slowdown that we're seeing in China, Australia's main trading partner. So basically, all in all, that's been a very bearish day for the Aussie dollar, US dollar. It's got a very strong bearish golfing in candle. This is going to be the level to test next at 67, 0.67. If we get below that, then I'll be watching for this level here, 66.50. And then the lower level of this, which was also the 200 SMA at 66. So there are a couple of levels to be watching on the downside. I mean, if this does offer support here, like we did see some support here back on Friday, 23rd of August, then the level on the upside to be watching is 68. So just going to have a quick look as well as to what's going on in the FTSE. Obviously, with China data, it can affect what we see in the FTSE, although it tends to be more based towards resources. Obviously, the data that we've had from China over the weekend did raise some concerns. We saw an ongoing contraction in the manufacturing sector. We're getting the services PMI data out overnight, which if we see, it's supposed to actually improve slightly to 52 gosh, I can't remember off the top of my head. So anyway, it is expected to improve slightly, which could offer some support to the FTSE. But if this whole sort of risk-off sentiment continues, then the FTSE may continue to struggle. It's back in this trading zone that it has been in really for quite some time, capped on the upside by the 683.60, on the downside by the 81.40. Did try to break out, but didn't really make it. So we're back in here again with the bearish engulfing candle. Midpoint watching out there is around the 82.50 level for a little bit of support, but I think the strong support is here at 81.20 is the level which we can see has offered support on numerous occasions across June. And then just finally having a look at Euro US dollar. I did mention we've got Eurozone data services PMI data, which is expected to show that the services sector grew at 53.4, up from 52.8. The composite PMI is also expected to improve from 50.2 to 51.2 in August. PPI data is expected to show that we saw a 2.5% decline annually, which, I mean, if we're seeing this sort of ongoing expectations of a deterioration in cooling in inflation in the Eurozone region, then that does support the ECB cutting interest rates again, especially given that weakness that we're seeing in manufacturing. We saw German manufacturing is extremely weak. Eurozone manufacturing is weak as well, but the service sector is the dominant sector. So that could offer a little bit of optimism. Obviously, we've seen the this pair come down from the 112. This is as we see the US dollar strengthen as those recession risks ease, and as we see expectations that the ECB could cut interest rates in the September meeting. Just testing at the moment, we've been through the 110.50, down here 110. That's going to be a key level. I think if we break below that level, it'll just negate that near-term uptrend. And it could then sort of bring into play the 109.22.20, which is this falling trend line, which has been in play since July 2023. On the upside, just watch out the 111.40. That was the level that we saw. It was the December 23 high that was broken down earlier last week. So I think the outlook there, just be watching this level here, as I said, 110. That's going to be pretty key as to how the euro performs thereafter. So I hope you like what you've seen. If you do, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.